Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Kansas City and Minneapolis wheat markets. Kansas City wheat. The market here has occasionally staged rallies up to the 50% Fibonacci line of the August 2020 to May 2021 move at 900. But these rallies have stalled and the market has expanded the downside instead, below the bright red trend line formed from the neckline extension of the small but influential October 2021 to January 22 head and shoulders top, currently at 846. This expansion on the downside has led me to give voice to the argument that the action since December 2022 may be a possible expanding wedge pattern with a flat upper trend line. However, much as in other recent weeks, I'm not wholly convinced of this, which is why I've not outlined it, nor marked it on my daily chart. Not yet, at least. It could be argued further that the action since December 2022 to date is constructing an inverted roof pattern, but that would depend on the market making higher lows from now onwards, which has not really happened yet, though I'm more inclined towards that than the expanding wedge pattern idea. What has been interesting is that in April we constructed a monthly key reversal down, and that may very nearly did the same in the month of May, and was on the verge of constructing a compound key reversal down, a rare pattern series. In the end, the market balked at such an idea and settled for a lesser outside month for May instead. These moves down and then back up have set up a possible diamond pattern type for the action from April, May, and as we go now into June. I'm not really happy about this pattern type, and I've finessed it once already. So whilst I outlined it on my daily chart, I have not highlighted it. However, just in case we have a break higher from this, let's call it a potential pattern, and that if it is confirmed the break higher, then I will outline some levels, if not targets, to look for. An initial primary level, not a target, would be in the 902 area, just over the 50% Fibonacci line, with a further hard to reach area up in the 946 level. This brings me to something else that I have noticed and which I have highlighted, and that is the December 2020 to date uptrend, currently at 770, and it's highlighted in dark blue on my daily chart. This uptrend held up the market in early May and again last week. Thus, we just might be starting to meet a support below that may be as tough as the 50% Fibonacci line at 900 is above. It is at this time that I'd like to introduce part of my commentary from 8 weeks ago, and I quote, "I continue to be in a bit of an indecisive move over this market. I can see good supports below and I can see good resistances above, probably reinforced with a declining long moving average, that's currently 872. Plus also the 50% Fibonacci line of the August 20 to 21 move further higher at 900. Overall, there seems to be no immediate pattern or path. Perhaps we will just go sideways for a bit, with a question mark added on that last statement." And that's the end of the quote. The situation has not really changed much since then, despite some earlier and now more current wider ranges. I can see potential patterns, but not just yet. Minneapolis wheat. Compared to Chicago wheat and Kansas City wheat, Minneapolis wheat here still continues to be an easier read with respect to what is going on and what the opportunities might be. This year the market has constructed two bear channels, the second of which that has morphed now into a descending expanding wedge pattern that's currently between 740 and 880. This one is actually even originating from December late last year, but really becoming evident in February this year. This wedge pattern is highlighted in dark blue on my daily chart. The upper trend line, currently at 880, has been reinforced, sort of, by the previously mentioned declining medium moving average, which combined to help cap the market in very early April, then mid-April, and recently in mid-May. Now, looking at last week, it seems for the moment that further attempts on the downside are not being immediately attempted, being held up by the June 2021 low, despite the overall bearish patterns and the weekly key reversal down 3 weeks ago. This higher low and pullbacks up this week, only to be capped by the declining short medium moving average, currently 840, and on occasion by the declining short moving average, of all things, currently at 816, seems to indicate a top side for the moment at these two moving averages and a base below around the July 2021 low at 778. This has led to the question, is the action since late April a possible double bottom in formation? I'm afraid it's too early to say as yet. But for the moment, the descending spanning wedge pattern, highlighted in dark blue, still runs the strategic actions of this market. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.